Good morning, everyone, and welcome to the Quantum Leap morning market analysis and trade plan setup for Wednesday, October the 2nd, 2013. For those guests that are in from Twitter, we are Quantum Leap. We're a self-organized learning environment. My name's Doug McKay. I'm a trader out of Canada. We have had a Skype chat room for 4 years now. If you're interested in coming and checking it out, you'll need a Skype account. Send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, if you want to get more information on our room or about Quantum Leap, just send me an email at dm@m4connects.com or give me a call on my direct office line. Each morning we come together and we go through a routine. If you're watching after the fact on YouTube, you might want to skip ahead to more in-depth chart analysis, but because we're getting ready to trade in the morning, we go through macro to micro, and we go through our key numbers first, and we go through basic trend charting. Before we get started, of course, we've got to get the legals out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to a financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades you see in Quantum Leap are for education purposes. Please trade your own plan, your own due diligence. So each morning we go through our list of key numbers on our homework sheet, and those that are in the Quantum Leap room, we post this each night, which is our QLTP, which is the ladder above the previous day close and the ladder below the previous day close, with all the different key levels based on multiple of methodologies and studies that we follow, and this is posted each night. And it gives our traders a guide to where other traders might be activated or levels that the market may rotate from. So that's part of our Quantum Leap chat. But the first thing we do is we go through the numbers from a macro to micro. So we have our year high at 1726.75. Our low and open are way down there in the 1400s, so they're not going to be a factor. We open this month at 1678.50. We have a high so far at 1692.25 and a low at 1675.25. Our previous month opened 1640.25. Our previous month is the year high and the all-time high at 1726.75. Previous month low 1630.75, and we closed at 1678.75, right about where we're trading right now. Our week open, we opened at 1675. Our high is 1692.25. Our low is 1666.75. And previous week open, 1706.50. Previous week high, 1707.50. Previous week low, 1680. We're below that right now. And our previous week close was 1685.25. We have just started a new quarter, so our quarter numbers are our weekly and monthlies so far. We don't need to go and review them. Yesterday in the Globex, we opened at 1678.50. We had a high at 1684.25, a low of 1676, and we opened at the 1676.50. We put the low in just before we opened. We had an open test drive in the RTH Open. We had a normal variation. We broke the IB to one side. Our opening swing high, 1681.25. Opening swing low, 1675.25 for a 6-point opening swing. Pretty wide opening swing. Gave us a pretty wide rotation. Our initial balance high, 1685. Initial balance low, 1675.25 for 9 3/4, just slightly over the average. Our 1230 number, all numbers in Quantum Leap are in Central Time. Our 1230 number, 1687.50 was higher. Our RTH high was higher at 1692.25. Our RTH low was higher at 1675.25. Our RTH close was higher at 1689.25, and our VPOC was 1686.75. And you can see it kind of halted the down move that we were in. Of course, we had a 17-point RTH range, which was the full session. We broke the high and the low in the RTH range. Our Globex 8.25. And I talked about this yesterday. They're starting to make moves in the Globex, and that was one of the reasons, I said you should, if you got an opportunity, you should be looking to trade in the Globex, and that's one of the reasons why I got short last night on the open, especially with that strong move into the close and in the extended session. Our full session high, 1692.25, put in the RTH. Full session low at 1675.25, also put in the RTH. Our 20-day ATRs are running 13, just over 13, just over 15, and just over 7 3/4. Last night we opened the Globex at 1691.50. Our European cash close yesterday morning, 1686.25. Value area high was higher at 1690.25. Value area low was higher at 1682.75 for a 7.5 point value area. And we made and broke the IB inside of the pocket. We run a study on the probability of when the initial balance is broken, and you have a very high probability of doing what we call a make and break, and setting the IB, the first hour high or low, and then breaking it within the pocket. And that pocket is that first 15 minutes between 9:30 and 9:45. The second highest probability is between 9:45 and 10 o'clock. Our extended session high, 1692. They went up and tried to make a new high. Didn't quite get there. Missed it by 2 ticks. Our extended session low, 1689.50, and our settlement close was 1691.75 for a 2.5 point range. And again, larger than normal. Our 20-day ATRs are running 1.5, and we had 2 days in a row where we had 2.5. Slightly larger volume at 1.4 and 1.7 respectively. Going over to the daily report, because we're in that balance still, there really hasn't been any move between the CHVNs and CLVNs or microcomposite LVNs. Yesterday, key LVN is 1682. We have a new microcomposite VPOC at 1688, which is naked, and one at 1697, and we'll go through that when we get to the charts. Naked crosses. Naked Cross is a study that I developed a couple of years ago. Uses the 9 EMA and the 20 SMA, and when the 9 crosses the 20 and the price moves away dramatically, I'll show it on the charts, it creates what we call unauctioned cross or naked cross, and the market has a very high probability of rotating back and retesting, re-auctioning that price point again. And we follow them intraday on the 5, 15, and 30 minute because we use them for targets, especially if there's clusters of them. And we took out the 75.25 yesterday, 76.50, 84.50, and 86.75, and we added 80.25 and 80. Of course, these got taken out overnight, so we have to make some adjustments. In terms of the naked VPOCs, we took out 77, 85, and 89.50 yesterday. Got some work done above us, and then we added the yesterday's VPOC at 1686.75. So let's take a quick look at the news. We had ADP non-farm really didn't do much for the market. We've got crude inventories, we've got FOMC members speaking, and we've got Bernanke speaking this afternoon. So should be an interesting day, especially with, remember that October the 17th is the debt ceiling, and the debt ceiling is 16.7 trillion, and our government, your government is shut down, and the market thought it was a good thing yesterday and rallied, but there's going to be lots of headline risks, so be careful and keep it tight. Let's go over to the macro to the micro trend charts. You can see on the monthly, the 9, the 20, good slope and separation, prices paralleling the 9 nicely, and we're trading in the upper distribution from last month. Trend is very strong in the monthly. Going over to the weekly, we had our first weakness a couple weeks ago where we had the first close below the 20 SMA on the weekly. That was our first clue that we were seeing weakness come into this market. Of course, we had the island top, but we went up and closed the island. But we're sitting right on the 9 EMA right now on the weekly, and the possible head and shoulder pattern setting up. So, we've lost slope. We do have separation, but it's indecisive on the weekly in terms of the trend. Going over to the daily tells a little bit different story, where we've started to roll over. We had closed below the 9 and the 20 2 days ago. Yesterday we popped back up above it, and so far today we've come right back down and we're below it, and we're coming into MA hug or MA squeeze. This is a decision point. So, whether or not we pop back up and continue the rally, or we roll over and we go down and hit those lower targets. There is a naked cross down here at 1653.35. We've got that measured move on the that's 1653.35 or 1654, which is important because if you go over to the geometric chart, this is the long-term upward sloping fork we've been watching for months. This is the modified shift fork that I added a couple weeks ago, and then this is the opposing downward sloping fork that I added about 2 weeks ago. And you can see that we've created some energy points, and the key energy point below us, as long as we stay below the center line of the modified fork and come down off of the upper line of the downward sloping fork, we have an energy point down here. Well, look at where it is, right near that naked cross at 1654 and a quarter, 1653 area. Of course, we could pop back up and test the upper center line, and if we do that, the energy point that I've got my eye on above us is at 1710 and a quarter. I'm hoping that doesn't happen. I've got my swing short. I've been working aggressively on my swing short. My Theo average is now up to 1745 after that short last night. Take a quick look at the intraday, but first I want to go and again just remind you that we do have that head and shoulder pattern that is still valid pattern with the measured move down to 1647. And remember that key area on the composite and the naked microcomposite VPOC is right down there at 1647. So we've got some confluence at the 53-54 area. We also have confluence at the 1647. And remember the 61.8 retracement is at 1663, which is also right there at the microcomposite, former microcomposite VPOC at 1663.75. So you've got a lot of indicators pointing that we're going to get a bit bigger retracement. Whether or not the overall trend is over, I'm not calling it top. I'm just saying that we're likely to get a bit of a retrace down into between that 1640 to 1665 area. Let's take a look at the 4-hour. You can see that we had come back up, created a bit of a tech gap right here, come back down, closed. We now have a MA hug going on in the 4-hour, but we're trading below the 9 and the 20. So the overall trend that we've been in the 4-hour is still intact. Going down to the 30-minute, you've got slope and separation on the 9 and the 20. We created a tech gap. We closed that tech gap. We came up and closed it on the 20, and then we rejected it, and we're trading below it. The trend is down on the 30-minute as well. And just going down to the 15-minute, we had a nice trend overnight, trended really down, created the first tech gap, and then tried to close back above, failed, came back down, and then we've been working our way up. Created a bit of a tech gap on the top against the 9, came down, closed that tech gap. News came out, and we came back down below the 9 and the 20, and now we've got an MA hug on the 15-minute on the 9 and the 20. So there's weakness coming in here, but the moving averages are showing us that we've got indecision, or we're at a decision point. Going over to the composite. Yesterday we talked about that I was anticipating once we had come back down and we were trading inside of this distribution zone between the 83.50 and the 65.75 with this undetermined fair value at 80 and a quarter, 78.75 and 75, that we'd just chop around here, possibly go up and test the 84, but I wasn't expecting as strong a move to go up and hit that high at 92 and a quarter, but we did. That's what happens. A little bit surprising, but then we came down and closed at that 89, and then overnight we've come back down into this distribution. I've added the last 2 days into the current micro composite. That gives us a new most accepted price for the time frame from 9/23 through till yesterday at 1688. We've got the former micro composite at 1675, which where we launched from, and we've got this undetermined fair value. My hypothesis for the day is going to be we get stuck in this area again, and we chop around with a higher possibility rotation up to the 84, possibly 88. To test the microcomposite VPOC and pick up sellers, or drift down lower and come down and test the lower CHVN at 71 and 68.75 with a possible retest down here at 65.75. We came down 2 days ago to the 66.75 and the buyer stepped in and pretty strong. It took us back up, but I imagine we come down and test this level again. Of course, if we get below the 65.75, we've got the naked close at 63, the naked VPOC at 63.75, and then we also have this microcomposite VPOC at 63.75 as well. So that's our main target below, with the other side of balance being down at 60.50. Below 60.50, my main target, as talked about earlier, is that 53.54 area, which is the value area high of this microcomposite where we launched from, and then below that we have the 47 and 48 microcomposites in the measured move from the head and shoulder pattern. Of course, if we do get up the upside, line in the sand for me for a larger rotation up is going to be right here at this 1690 CLVN. If we get above that, then I'm looking for a move to make a move up to that 95.50, which was the former microcomposite VPOC that we are watching. Right here, 95.75, and then where we tried to hold value when we first came down in the smaller micro composite at 97. So those are my upward targets, and of course the extended target would be a test of the 1700 centennial number and the 1701. Let's take a look at overnight and move our numbers over to our trading intraday chart. Of course, we opened and went up immediately and hit that 92 as the high. So our overnight high is one tick below the range high from yesterday at 92.25, and 2 ticks below the naked close at 92.50. So overnight high is 92. We have the gap close here at 89 and a quarter. The overnight low was 75 and a quarter, which is right at the low from yesterday. And of course, right near that key CHVN at 75.75. We're currently trading in the lower distribution from yesterday. The value area low is at 82.75. 82.75, just above that key LVN from yesterday, between the two distributions at 82. The value area high is at 90 and a quarter. Our current microcomposite our current Globex VPOC is at 1676.75. We could get a shift before the end of the Globex session. The possible shift would be to 77.50. So I'm going to put it in at 76.75, but if it changes, then we'll just make that change. Of course, we're trading just above it. Now, in terms of my areas to do business and my hypothesis, we're in the lower distribution. We're in this area of this, undetermined fair value between 75, 78, 75. So I'm anticipating some rotation to test those levels. The HVN of the lower distribution for yesterday is 80 and a quarter, which is right there at the dominant CHVN. And of course, the CHVN to the low side is 75, just below the overnight low and the range low from yesterday. So I'm anticipating that we're likely, if we see some selling come in, to come down and test this level and try to break out of yesterday's range and pick up some buyers. If the buyers come in, then I'd be looking for a rotation back up with a target above at 80.25, with resistance coming in between 82 and 82.75. So my trade area is I am going to trade off of the 75. If we break down below it, then I'd be looking for a rotation down, and first target below is going to be that 71 CHVN below at 71. And then below that, we've got the 66.75, which was our low from the other day, and the 65.75 would be the first area of support I'm looking for, and I'll be trading off of that level between the 65.75 and the 66.75. Above, I'd be looking for rejection of this LVN and value area low, so I'll be trading in there as a main trade area. And if we reject that, I'm looking for the rotation back to 80 and a quarter and play ping pong again between these three key CHVNs at 80 and a quarter, 78, 75, and 75. But if we get above, then I'm looking for a rotation up to that 86 level with 84 just in front of it, and possibly a move through to close out the gap closed at 89 and a quarter and test the value area high at 90 and a quarter. That is going to be a trade area for me as well above. And then of course, if we continue the move up, to take out the overnight high and the naked close at 92.50, and I'll be trading on that level up here at the 92.50 with the gap close, and possibly breakout of the range from yesterday and a move up to that 97 area above in 1700, and that will be my target up above will be 97, with 1700 being that extended period. And I will have a trade level up there as well between the 1700 and the 1701. So that's what I'm looking at in terms of areas to do business. Of course, if intraday trade setups come into play, we'll take them. Other thing we like to look at is where those levels line up in terms of the Keltner channel with the Renko. 78 and a quarter is our center line, that one tick below that 78.50 CHVN. Above that, you've got the rotation up to the Keltner upper line at 84. Again, a key area, the CHVN at 84. Is it 84, 85, 84.75? 84.75, so that would likely give you a rotation up there. Of course, you've got the 80, 50, 80 and a quarter just above it as well. If we stay below the Keltner center line, then I'd be looking for a rotation down towards the lower Keltner channel at 72 and a quarter, and that's going to put us pretty close to that 71 CHVN. In terms of gold, yesterday, and I've been talking about this, that I was waiting for this move down to this 1284.90 area to see if they can come down and pick up buyers. I started to try to build a swing long position, in this area. I took a few shots at it yesterday, and picked up 68 ticks trying to do it, but I couldn't hold it. It went all the way down. It actually came down to the 76 area. I think the low was 77.40, and then picked up buyers, and currently we're trading at 1301.70. Now, as I mentioned before, if you watch this 2100, let me get the right chart up here. This 2100 or 9 p.m. Central Time, this is a tendency to be a directional move off of here, and also, if those that know me and how I trade gold, this tech gap with the Mr. Sneaky, is one of my favorite gold setups for trading gold. I actually missed it. I didn't get long. I got long right here with the retest of the 9 EMA from the little bit of a tech gap closed there, and I got long there. But keep an eye on this timeline and also on these setups. And if you look at this setup showed up on all the time frames last night. Here it is on the 5-minute. Here it is on the Here it is on the 15-minute. Tech gap, Mr. Sneaky. Here it is on the 30-minute. Tech gap, Mr. Sneaky. Here it is on the 4-hour. Not quite a Mr. Sneaky, but you had the tech gap. Well, the Mr. Sneaky came in a couple bars later. Is that the right one? No, that's not the right one. There it is. This one right here, sorry. Tech gap, Mr. Sneaky. So, keep an eye on these tech gaps. My favorite, of course, is the 15-minute, and that's the one I trade my gold on. So what I'm looking at on gold is we're back up above 1300. My immediate target above is this 1309.60, which is the microcomposite VPOC of the double distribution. We came down into the lower distribution in the former microcomposite VPOC, the overall larger balance and most accepted price, where I was expecting buyers to be activated. They had a little bit of a push through, but they've been activated. We're now, trying to stay above 1300. If we stay above 1300, I'm looking for a rotation of 1309, and then the immediate target above that will be up here at the 1325 microcomposite VPOC, which is the most accepted price within this balance area here. And then above that, I'm looking at the 1330 area from this former microcomposite, and value area high for this microcomposite at 1344.80. So that's what I'm looking at. Howard's here, so I'm going to just bring him up, and he can come on and do his analysis if he's ready. Howard, over to you.
Good morning. Sorry about the late start. So I'll just start with the monthly chart. I'll make this brief. We're kind of getting close to start. We had a near shooting star, and we're just starting the month out, so how it plays against this shooting star will be a key thing to watch over the next month or the week. And thus far this week, just 2 trading days into it, we had a challenge of the 9 EMA, and we're holding it so far. Going to the daily. Yesterday's rally, it took us to close above both the 9 and 20 SMAs, or 9 and 20 moving averages. Over the Globex period, we've pretty much created an equal and opposite candle thus far. So we'll see how today plays out in terms of this reference point, but we come back below the 9 and 20. We actually challenged the 50 SMA again. So, thus far this rally from yesterday has been rejected overnight. So we'll just see how that continues to play out today. Key level below is this 50 SMA around 1676. We've challenged it a few times, but have not yet closed below it. And we're also getting a 9 cross over the 20 thus far today. So we'll see if we do get the crossover by the end of the day. So looking at market breadth. With the rally yesterday, we had just a slight rise in advanced declines and up-down volume, but not much. It's mostly flat still. Advanced declines are right at the 50% level, just above it. NYSE up-down volume is now below the 50% level, so there's more net down volume in NYSE. So where it was strong at the peak, NYSE has shown more weakness relative to the NASDAQ, here in red. So, thus far, this high has been holding along with price. So, key level is if the internals start falling below this 50% level, where we have more declining issues than advancing issues. So looking at the sectors. Looks like we had broad agreement with yesterday's rally among the sectors. Looks like all of them turned slightly positive on the day. Finally, the Dow Industrials versus transports. Looks like the transports was a little stronger than the industrials. But otherwise, they're still at sync. Transports seem to be expanding the gap a little bit. And relative to the other futures, the industrials have been a little weaker lately. And with that, Doug, I'll turn it back over to you. About 9 minutes to open.
Thank you, Harry. All right, that is going to complete our morning session. Again, if you're interested in finding out more about Quantum Leap, there's my contact information on Skype. This is our Skype room. Well, I don't have it open on this computer, or do I? This is our Skype room right here. It's open 24 hours. It's where we come and chat. We've got about 80 members. It's a pretty tight-knit group of people. Of course, I run a live trade room now as well that I'll be opening up in just a minute on another go-to. And then, of course, we're going to be looking to get a Quantum Leap boot camp going in October as well. I'll be talking about that further in the next few days. Also, I've had some interest and some requests talking about my swing position and how I build a swing position. So if there's enough interest, I'm thinking that I might do a Saturday morning breakfast club this weekend and just talk about and do just a quick session in terms of the anatomy of building a swing position, because a lot of people are confused on how I do it and why I do it the way I do. So let me know if you're interested in something like that, and I can put together a breakfast club for Saturday morning if there's enough people that want to attend. Anyway, as always, trade well, trade safe. We'll catch you on the flip side. For level 2 and level 3s, I will open the room in just a minute and post it in the boot camp room and the live trade room chats. Have a great day, everyone. Remember, lots of headline news. Keep it tight. Keep it light.